Good morning, everyone. Well, Fed policy is a focus this week, as I said yesterday, but just because people are focusing on it doesn't mean it's becoming any clearer. We had one article suggesting that the FOMC minutes would be hawkish, and another they'd have a softer tone. San Francisco Fed President Williams noted that inflation has been persistently below the Fed's long-term target, but he added that the Fed would probably start raising rates over the next year or so. Fed funds futures implied rates at the long end were down 5.5 basis points, yet 10-year bond yields were up 2 basis points. There was a similar mix of views with regards to ECB policy. Now, the fact that Eurodollar was unable to make new lows against this mix of views made investors nervous, and there was some short covering as a result. I think the market's starting to pay more attention to this weekend's European Parliament elections, and this is likely to be negative for the euro. Taking Greece as a harbinger of what's to come, the center-right New Democracy Party and the far-left Syriza Party did well in the weekend's preliminary elections. No candidates from the ultra-nationalist Golden Dawn Party made it through to the second round of voting, but they did perform surprisingly well for a party whose leaders have been charged with belonging to a criminal organization. The relatively good showing of the extreme left and right demonstrates how voters can use these European elections to send a message to their national governments, and their governments are not deaf. Perhaps in recognition of this fact, peripheral bond yields continued to rise yesterday. Inflows into peripheral bonds in anticipation of future quantitative easing has been one of the factors supporting the euro. But if the protest votes result in governments backing away from austerity and reform, then we could see outflows from both Eurozone bond and stock markets, plus a resumption of the risk premium in the euro. On top of divergence in monetary policy, the return of the political risk premium to the euro should keep Eurodollar under downward pressure, in my view. The Aussie dollar fell overnight after the minutes of the recent Reserve Bank of Australia meeting showed that officials expect growth to remain below trend and rates to remain low. This confirms my view that the Aussie dollar is likely to weaken. Anyone interested in my view on Aussie dollar, I'd be glad to send you a recent paper I did on the subject. Send me an email. Today, the main event is probably the UK CPI for April, which is forecast to have accelerated to 1.7% year-on-year from 1.6% in March. Inflation moving back up could make investors think a rate hike is more likely and send sterling higher. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giddler, Global Head of FX Strategy at IronFX Global, wishing you solid trading.